Hey guys, my name is Gareth and welcome back to my Finance Fitness YouTube channel where we talk about personal finance, investments, real estate, financial freedom. So if any of those topics interest you, make sure you subscribe to the channel. In today's video, we're going to look at different types of real estate and how those would perform this year. In my previous video, we looked at whether investing in real estate in 2020 is a good idea or not. So if you have not yet seen that video, I've included a link in the description, so please have a look and be sure to check that out. In that video, we covered that this recession will have deep and long-lasting impact on economies around the world, but that this may present an opportunity for you to invest in real estate. Now, I started off investing in apartments and then later also houses. And so I found myself wondering, what type of investment will do well this year? Would it be better to invest in an apartment or a house or maybe even commercial real estate? So in this video, I want to look at those three types of real estate investments. Of course, there are many other types of real estate investments like raw land or mobile homes, but for most of us, those are probably not as relevant. So I wanted to zoom in on the three types that are probably most relevant to all of us. And before we continue with this video, I just want to say a big thank you to all of you for the amazing support of my first video. It really means a lot and it makes such a difference to helping grow this channel. So I really appreciate it. Thank you. So let's get into it. There are many factors that affect the value of a property, but in today's video, I'll highlight a few for each of the three property types. In my last video, I mentioned that history tends to repeat itself. And if we look at what happened in the past, it helps us understand how best to navigate the current situation. The 2008 financial crisis was largely fueled by excessive lending by banks to people who had a low chance of realistically actually paying back those loans. This led to excessive house prices. The 2020 recession has been different this time around, as the recession has been triggered by an external health shock. But in the last 10 years, we've also seen game-changing technological advancements. The biggest taxi company in the world doesn't actually own the taxis, while the biggest accommodation provider in the world doesn't own the accommodation they provide. Of course, the biggest technological advancement that affects real estate is probably Airbnb. Airbnb has hosted over 400 million guests in 191 countries since it was founded back in 2008. With 88% of reservations for 2 to 4 people and a need for central locations, this has meant that nearly half of all listings on Airbnb are for apartments. Airbnb has completely changed the real estate market. Hotels have seen a sharp increase in competition, and tenants have fewer units available for long-term rental, as many of them have been converted into Airbnb listings. As a response, many governments have introduced new regulations to try and limit the amount of units available on Airbnb. And we've seen this around the world, for example in Barcelona and in Berlin, where they're even introducing fines of up to 100,000 euros. In fact, many people were using Airbnb as a business, where they went and bought properties using loans and then listing those properties on Airbnb. And this proved to be a really successful strategy for making money. But when countries around the world closed down their economies in the wake of this pandemic, the occupancy rates of Airbnb fell significantly. Before this pandemic, the occupancy rates were around 65%, but subsequently dropped to less than 30% in most cities. And with all of these vacant units, Airbnb hosts have seen a sharp drop in the amount of income they would normally get, making it more difficult to cover their mortgage repayments and monthly expenses. This has meant that many owners may be forced to sell their properties really fast. I previously mentioned that I've already seen a lot of new units coming onto the market, and a large portion of these are apartments and previous Airbnb listings. And here I think apartment prices may adjust faster than other types of real estate. While many governments have been providing stimulus support to their populations through monthly checks, these are unlikely to be sufficient to cover the shortfall that many Airbnb hosts are experiencing. And even if it does, it is only a temporary measure. Once these financial aid checks stop, it's unlikely that the occupancy rates will be at the same levels than they were before this pandemic. So this may present a chance for you to buy a well-priced apartment, potentially even fully furnished in a good location. In the comment section, let us know if you have any experience as an Airbnb host and if you currently find yourself in this situation. Next, we will look at houses. Historically, house prices have been a bit slower to react to an economic downturn, as the impact of this takes a bit longer to cascade down to homes. Families first deplete their savings and try and renegotiate their repayments with the bank. Should this fail, eventually the legal process will start to foreclose or repossess the property, and this can take months. This could be even further delayed by the impact of the stimulus checks that families are receiving during this period. This could also be the case for apartments. The next big factor that could affect houses in a big way is the new way of working. When the lockdowns were imposed around the world, many companies were forced to send their staff home and work remotely. Many companies have subsequently realized that this may present a more sustainable, longer-term solution. So with employees spending more time at home than before, there seems to be an increased appetite for investing in real estate, as it seems more worthwhile to make such an investment. These factors are positive for the housing market. And this is why I expect that house prices may be slightly slower to adjust to the current situation. That doesn't mean that there could be good opportunities that pop up, so keep an eye on the market by looking at available listings and working closely with your real estate agent. For one of my next videos, I want to talk about some of the saving tips that I found really useful during this lockdown period. And lastly, we will look at commercial real estate. Commercial real estate is generally properties like shopping malls, offices, medical and educational buildings. With many employees working remotely, there has been a sharp decline in the demand for office space. In fact, many companies see this as an opportunity for them to reduce the rent and utility costs. In Manhattan, Barclays, JP Morgan and Morgan Stanley, which are some of the biggest commercial tenants, have already indicated that they will not be sending all of their staff back to the office. And this new way of working has become a common theme across the world. This will have a huge impact on the financial value of commercial real estate. But there are one or two exceptions. First, medical buildings. Hospitals and healthcare spaces are likely to continue to grow and come through this quite strongly. During this pandemic, there was a sharp increase in medical needs around the world, and with a higher proportion of aging populations in developed nations, this will continue to grow into the future. Now, many of us don't have the money to go out and buy a hospital, but you don't have to do that to get exposure to commercial real estate. One of the most popular ways of getting exposure to commercial real estate is through a REIT, or Real Estate Investment Trust. These trusts invest in commercial real estate and distribute the profits to the investors. So this could be an option for some to invest in commercial real estate. But if you pursue this, be sure to carefully look at what type of commercial real estate the REIT is actually investing in, because as I mentioned, some commercial real estate will perform better than others. If you're interested to learn more about REITs, I've included a few links in the description which you may find useful. The second exception is small businesses. If you're a small business owner, this could be a good opportunity for you to buy your current office space at a reduced price instead of continuing to rent. This is a trend that has grown a lot in recent years, where owners go out and buy the office space the business is currently in a separate legal entity. By doing this, the new legal entity becomes a landlord while their existing business remains the tenant as before. Therefore, instead of continuing to pay rent to an external landlord, they're now paying rent to themselves in their new legal entity. So in a sense, they're both the landlord and the tenant. By doing this, they're able to generate a second stream of cash through rent, which can serve as a great passive income in the future. So to summarize, we looked at 3 different types of properties and how they may perform in 2020. Apartments have been transformed by the introduction of Airbnb and the subsequent collapse in tourism. Housing markets may benefit from the new normal of teleworking, while commercial real estate has been transformed and may never be the same again. So guys, I'd love to know what type of real estate investments you're looking at making this year. So let me know in the comment section. I hope you enjoyed this video. Please be sure to hit the like button and subscribe to this channel. You can also hit the notification bell so whenever I upload a new video, you will receive an alert so you can watch it. I really appreciate all the support and thank you so much. I'll see you next time.